This report is from today's CNBC Daily Open, our new, international markets newsletter. CNBC Daily Open brings investors up to speed on everything they need to know, no matter where they are. Like what you see, you can subscribe here. A fierce winning streak U.S. stocks rose Tuesday to hit fresh winning streaks, their longest in 3 years. But Asia-Pacific markets were mixed Wednesday. Japan's Nikkei 225 ticked down 0.1% despite rising confidence among large Japanese manufacturers, according to a Reuters Tankan survey. Meanwhile, Australia's S&P/ASX 200 climbed 0.2% a day after the country's central bank raised rates by 25 basis points. Microsoft closes at a high. Microsoft shares climbed 1.12% to hit $360.53, a record high. It's the 8th consecutive day in which the technology giant's shares rose, a streak unseen since January 2021. Investors cheered Microsoft CEO Satya Nadella's surprise appearance at OpenAI's event, where he encouraged developers to build with Microsoft's Azure cloud infrastructure. Absolutely booming, Chinese sector. China's economy hasn't recovered from its pandemic blues. But in the sectors of electric vehicles and everything around sustainability and renewable power technology, China is absolutely booming, Standard Chartered CEO Bill Winters told CNBC. Relatedly, China's truck industry is increasingly using vehicles with assisted driving technology, a critical step toward monetizing the nascent business. Peak, not pause? The U.S. Federal Reserve, European Central Bank and the Bank of England all paused interest rate hikes in recent weeks. This breather comes after dramatic hikes over the last 18 months as central banks grappled with unruly inflation. Some market watchers, in fact, think this lull in hikes isn't so much a pause but the peak in rates, and are turning their attention to when central banks will start cutting. By BYD. Over the past 18 months, Warren Buffett's Berkshire Hathaway has sold more than half its stake in Chinese electric vehicle maker BYD, according to stock filings. Despite that, analysts still think BYD's a stock worth buying, and some even raised their price targets for the firm. Last month's sudden surge in Treasury yields and oil prices, both of which tend to suppress investors' appetite for stocks, looks to be ending. No, scratch that. The increases aren't just ending, they're ebbing. Look at oil. Contracts for both West Texas Intermediate and Brent futures fell around $3. WTI's now at $77.01 a barrel while Brent's $81.44, their lowest since July. That's almost $10 per barrel less compared with a month ago, when prices jumped on fears triggered by the Israel-Hamas conflict. Meanwhile, the 10-year Treasury yield fell around 10 basis points to 4.569% and the 2-year yield slipped 3 basis points to 4.915%. As Treasury yields serve as the benchmark for interest rates on loans and cash investments, sinking yields generally benefit rate-sensitive companies more.